Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Hi, everybody. Hope y'all are doing well. It's the Black and White Market Minute on Life Planning 101. How are y'all doing today?
Doing great. Man, I think this is our first one for the year, isn't it?
Good old 2026, I think.
Happy New Year's, everybody.
Yes.
2026.
And already the market's deciding to do some fun stuff,
Yes.
isn't it, Aaron?
Yes. I don't think people know this, but this has been one of the craziest markets ever. And it kind of reminds me close to either COVID or the little tariff temper tantrum back in
April of 25.
Yeah, second quarter of last year. Absolutely crazy 5 days. And this is going to get ugly, so take the children off. But before anybody gets scared, I think today, as of today, our accounts were up about 6% for the year. It's fantastic. If I back up one day, as of yesterday, the Dow is down a total of 0.25. No, let me back up. The Dow is up 1.77. The S&P is down 0.63. NASDAQ's down somewhere around 5. So there's a lot of companies that have done fantastic, but the momentum trade, pretty much anything that you've been investing in because it's been going up, wow.
Stopped going up.
Yeah, it stopped going up, and we had a quick little correction. And when I say quick little correction, this was since the 28th. Silver is down 37%. 37%. You know, I kind of tell you what happened. I remember it was the day after my daughter graduated college. I was helping her move out of her home, and got a call from a buddy of mine, and he was selling me silver coins, and it was around $23, somewhere around in there. I could be off a little bit, but since then, as of, I guess, 7 days ago, silver had climbed all the way to 130. So we're talking some massive growth in that metal, and then it dropped back 37%. So if you got into the metal because you were excited about how fast it was growing, there's probably a good chance you don't own it anymore. It scared you that bad, and you got out. It was unbelievable. But that's the worst kid in the room. But let me tell you some other ones. Microsoft, that's been a darling for decades now, down 18%. Palantir, down 17%. Let's see, where's some other? NVIDIA, down 10%. And this was in 5 days. 5 days. So the market said no more. And before we go and start selling everything, we are having a heck of a correction today. You know, the up somewhere. What is S&P up?
S&P's up 2% today.
2%. So I think people got a little bit ahead of their skis both ways. And it's kind of funny. There's a lot. It used to not be this way. We used to call it smart money and dumb money. And retail was not the smart money. They buy a lot more on emotion, and they tend to buy the best things, the things that have worked the most in the most recent time. So we know there's a lot of people that have been jumping in hand over fist because of how well the market's been doing. And this is usually when we see these kind of corrections. And once it starts going down, the non-institutional investors start selling out faster. It's harder for them to see the longer-term goals. So that's why the market is becoming more volatile. is the retail market is getting a lot larger as a percentage of overall traders.
And so, just to add to that, what I'm hearing is these people, of course, like your average investors, they're seeing all these numbers plummet. They get scared. They pull out their money.
They pull out.
But now we're going to get to the point, and please correct me if I'm wrong. Now all of us are seeing these lower numbers, and that's when we're saying buy. But
Yes.
that's going to do the correction. That's going to drive it back up.
Yes,
So
that gets exciting.
Yeah, that's just the roller coaster ride of the stock market at this point.
Yeah, and you know what? That's probably been the most successful strategy, and it's buying the dip. BTD. Anytime the market goes down, you buy more. And if you've held on to that strategy since 2022, you've knocked it out of the park. And it's really been working a lot longer than that. So that is one strange thing that has happened. Usually if we get a little dip, right back to where it was. Everybody's buys lows. So to see this happen 5 days in a row, it's a little bit strange. I'm kind of surprised, and I was going to say I'm kind of surprised that we didn't get more phone calls about what's going on.
Knock on wood.
So thank goodness we're not all in silver. We don't have 100% in our in the tech funds. We are very well diversified. So if you've just been looking at your own count instead of looking at watching the news, people are being okay. So that feels good. But one of the other things, and this is getting alarming, is what is happening to software. Software, I think just this week, software had two of the worst declines in existence other than COVID. We're talking 7.5% drawdowns.
And that's as a, what is that, an industry?
Yes.
Wide? I mean, there are some that are down 50, 60%,
Oh, yeah.
not
Yeah,
necessarily in the last 5 days.
Put
But
all of the software companies together, that's why there's I think SSGA puts out a good index. There's several of them out there. But it is looking rough. And the big fear is, hello, why am I going to pay these software companies $30 for every person in my company, or tens and tens of thousands of dollars company-wide, if I can just go to AI and say, build this for me. So it's moving, and it is very, very devastating. There's a company out there I think most people have heard of. It's called Adobe. One of the most successful software companies, and this is a company that the return on invested capital, or the money that the company is making, is hand over fist, 20 to 30% year after year, and we're talking decades. If anybody's ever opened up a PDF, that's Adobe. They're very good in like if you were going to build a digital commercial or some kind of advertising, you would go to Adobe, and they've done great. And I guess it was last summer, wasn't it? I had one of our interns looking at this, why it was so beat up, and kind of the idea was that there was another company out there called Figma that was doing the same thing as Adobe, and they were doing it cheaper. And, it's a younger crowd doing new stuff, so I was like, okay, well, they finally got some competition. But they were just early, because all software is going through the same thing. You're replaceable. But, I mean, what do y'all think? How easy is it to get up and change your software?
well, nowadays you can build your own software. I mean, I was looking at Claude, which is Anthropic's AI system, and I went home last night, and I probably shouldn't have done this, I don't know, but I wanted it to evaluate my computer and optimize my computer, and it literally looked through the coding at my filing and suggested a restructuring of my filing system to be more optimized. And so I don't know. I mean, the AI trade is going to make software pretty easy to duplicate, replicate, optimize, and things like that.
Yeah, no, I agree, but how scary is it? You know, hey, we're going to change our CRM tomorrow. Or, hey, guys, let's not use Excel anymore. I've been playing on our AI. We're gonna use this other thing. How hard would that be to do? Because everything what we have is in Excel. Everything that we have in our CRM is the same. So to me, it would be very hard to just turn that page.
And it goes back to the psychology of just the brain. We don't like change.
We don't like change.
You know, people, you ask some people, I was having this conversation the other day of, if you don't like the position you're in, why don't you change it? Like, you have all the steps, you have all the recipe to change it. And some people are just like, well, I just don't, that's a lot of work.
Yeah.
That's different.
That makes me feel
we're
all
scared
warm
of
and
it.
fuzzy.
Like, I don't like that. Like, I'm comfortable over here. And even if it's a bad comfortable, we're used to it. You know, you like the rules. And as soon as someone says, hey, let's change them, the human brain just says no.
Yeah, go straight to defense mode. But guys, this is all new for us, right? AI has just been in the picture for a couple of years. What if that becomes the norm? What if I said, hey, Monday morning we're changing this because I just built this out? And maybe Thursday before, Tanner had built us something else. But we were so comfortable with change. You know, what if it was no big deal to substitute, move? And then we just started looking at things as bits and bytes and pieces of data that we could plug into any system.
But that's scary too.
That's terrifying.
That is
That's
so
absolutely
terrifying to think that you could change the picture in an instant. That the next day Tanner could come up with something that just doesn't fit anything. And think of the from like a consumer standpoint, how unreliable is that to think that why would I put my money in you if I know that you could change your whole scheme because of one AI data point?
What if that AI data point did everything for you, though? If I were going to play both sides, let's just say I create something on Thursday and I make something exponentially better, and then Kade makes something else the very next Thursday that makes it so much better where we don't even have to ever do it again.
That's what I'm saying.
Right.
That becomes, we're used to it.
Right, but where's the point where there's a point, though, I feel that it's like you're right against a cliff. Like, at what point is it too much?
I think you are both saying the perfect things. And to Kate's point is we are so reluctant to change. You know, we're comfortable. We don't want to do that. And we're not used to it. But I know nobody in this room would remember. But if I'm looking back a couple of years ago and someone came to me and say, hey, I want you to hold this. What do you think about carrying this device? And your wife can follow you everywhere you go. She will get a hold of you anytime she needs to. And anybody, you will never have an ounce of privacy ever again. Would you ever do that?
No.
How hard would I fight against that? And today, I have an anxiety attack if my phone's not with me.
Yeah.
I do have an anxiety
First thing I
attack.
do when I get to the office, hey,
Yeah.
Molly, hey, can you bring me my phone?
Exactly.
You know, so just because we're not used to something and it sounds absolutely absurd doesn't mean that it won't happen.
Well, and it takes time.
It takes time.
Because I think a perfect example is like, I don't know if you've ever worked with your grandparents on trying to work a computer or a TV or something, and they're like, "Oh, I'm not going to do that." I mean, my grandmother still has a flip phone, and even that's a challenge. So there are some people, but over time, now we have grandparents who are on the Facebook and playing the Candy Crush all the time.
Yes.
You know, and so it's an adjustment period, and I think that's going to be it with AI. Is it's so new right now and so raw. That's where you get kind of tying it back into the market. That's where you get this volatility. But as it becomes more normalized, as we're heading towards, that itself is going to change the market and how volatile and what it does to it as well.
And I also think that people that are my age, I'm 22, I've never had a job or been in college without AI. Like, since I've been in college, I've had some sort of AI, whether that was ChatGPT, now there's Gemini, now there's Claude through Anthropic. I mean, I also wonder if people that are my age are thinking they're getting ahead by hopping on the AI train before generations ahead of us. I wonder if they think, like I do, if I get ahead of the game in AI, then I'm going to have job security for over the next 50 years.
Well, if you truly believe that, you will have job security for the next 50 years. You know, to already have that mindset, you're light years away from us old folks. Because it will be the norm. And the faster you can accept that and start implementing it into the things you're doing, the faster you get ahead. And that's terrifying for me to say. Absolutely terrifying for me to say.
But I would argue it all depends on how you're using it. Like,
Oh, yeah.
Case in point, I use it as more of a learning tool. Like, I taught myself code through AI. I was like, hey, help me learn this. And it's a great streamline. I think it becomes a problem when a person relies on it heavily, or you have people creating art from it. Like, that's not great.
Yeah.
There's no reason for that. To me, it should be more of trying to get the mundane out of the way. These things, because we're humans and we've created this. Actually, I'm going to stop that train of thought because that's a whole different podcast and a whole different night. That's a very philosophic thing.
You know, what about the gates? You know, the restrictions. You know, to me, there's things I can, and when I'm talking software technology, that there's things I can and I can't do, and I know this. But you got some of these younger people that don't have that. I can do whatever I need to do. There is nothing holding me back. I just have to be able to put the right prompt in, put in the best question. What if you did not have those mental barriers? I mean, no, I'm not saying that's right or wrong, but that's really a fascinating thing to think about.
Things could go a lot faster in terms of development is
Yeah.
what happens. And so you get to the point where you're going to need a whole new rule book to handle these changes.
That's scary for me to say because I've seen the things that you can do in software in just a very short amount of time that we've been doing it. So thinking that you think of restrictions, that's kind of crazy.
You know, we've been talking a lot about how fast things move, exponential changing, you know, 1 week from the next down the road using AI and stuff. But what does 10 years look like? And not just from a, you know, I have my own email agent that manages my email and calendar and appointments, but I mean, what does productivity look like 10 years down the road? If we can scale the current business without adding anybody over the next 10 years, I mean, what does that do? I mean, like right now, employment. There have been mass layoffs at several of these AI builders. I think Amazon was the most recent one. I mean, Washington Post, I think, laid off 300 employees. And, of course, they're all journalists, so they all had something to say about it. But I think they laid off like tens of thousands of employees at Amazon. And, of course, none of them have a website that gets their opinion out in the world, so you don't hear anything about it. But, I mean, the productivity over the next however long you want to think about it is going to be crazy. But what does that look like in the markets? I mean,
I was
it'll be
just
interesting.
listening to a podcast, and he was talking about this same exact thing. And as a business owner, he was talking about the use of AI and that he needed to be 10 times greater the man with those tools than he was yesterday. And he was talking about the types of people he wanted working with him. And he said that they need to be all entrepreneurs. I need people that are going to make decisions and be able to be held accountable and want to succeed. And they need to be that 10x person as well. And it's going to be me and those 3 or 4 other people. And the other 30 are going to be gone. Because we will replace them, and we'll all want the same thing. We want success. We're willing to do whatever it takes, and we're willing to learn. And he didn't call it an entrepreneur. He called it He said entrepreneur the first time, but the second time it was like a corporatepreneur or something like that, a corporate person with that mindset. And, you know, if you think about it, let's just take a company that had bringing in $100 million in revenue, and there's 100 people. And AI comes in, and now there's only 10. What happens to the economics? Those 10 people still get all the revenue and all the employment expense on those, and they're still spending it in the economy. The other 90 have just fallen behind. You know, so to me, I think if we've been complaining about the rich get richer, it's fixing to go very quickly and very drastically. It's going to go the other way. And it's not going to be the rich get richer. It's the want-tos versus the where's my handout group.
Well, and there's been an interesting, you know, you always have the conversation or all these layoffs and all of the displacement from AI from a job standpoint. Is that going to lead to mass unemployment, or is the economy eventually going to evolve in a way that employs the people that were laid off? And it's been an interesting to see over the past 2 to 3 years, the AI spend on capital expense and infrastructure has gone through the roof. So there's been employment in that sector, but now they're laying off mass layoffs on the technology groups because they've implemented AI to replace them. So, I mean, it'll be interesting to see how that evolves over the next 3 to 5 years as well. I mean, I know as they come out with more announcements for CapEx, capital expenditure at the moment, some of their share prices react negatively on the news. So, I mean, it's interesting to see that after 2 years of the more you say AI, the higher your share price goes. And now there's been a little bit of a hesitation in the past month if they come out and say, hey, we're going to spend another 100 million or billion more than everybody expects. And it's like,
we were talking about that earlier. Microsoft said, gave out their CapEx, and when we're saying CapEx, it's how much they're basically spending to invest, building a new data center, more real estate. That's what CapEx is. Microsoft came out with their number, shocked the market. What did I say? They were down 18%.
Mm-hmm.
Meta came out with something pretty similar on a size basis, and they went up. So it's a great insight. It really depends on what you're spending on and the degree of the spending. And I also think it's kind of cool, how many times have we come back to this point of where do we get our money? Where do we get our paycheck? How does our government pay for our people?
And how does the economy circulate if all of this stuff is happening?
Yes.
Because that's, you spend money, that money goes back to the workers, and it's how the economy rolls. So if you take the paycheck out of the equation, what makes the economy go?
And it's probably going to be something in the middle. And we've talked about this. I honestly cannot see a 5-day work week. 5 years from now, it's going to be closer to 2 to 3 days.
He says that as we're here on a Friday, folks. I'm just saying.
Hey, and we're going to talk about this tomorrow, too.
I like that. Oh, wait, not tomorrow. Wait a minute.
Well, there are interesting things competing against each other. You have the technology, which is going to kind of drive deflation. Because as technology gets better and cheaper and faster, the price may go up, but the quality goes up exponentially. And so what used to be expensive today becomes cheaper. So the technology evolution is going to cause this deflation.
Yeah.
But then with the load of government debt and the load of weight of that debt on the American taxpayer and the American economy is more of an inflation driver. So those two competing forces are going to be interesting to watch.
Yes, it is.
As this all unfolds too, especially with the CapEx spending. I mean, that's going to drive inflation in one sector where, deflation of wages could be experienced in the sector where layoffs are happening.
Have y'all seen those? I can't remember if it's Microsoft or Meta, but those big goggles that they
The
put
Oculus?
on.
Like the
something
VR
like
stuff?
that.
Yeah,
huge.
that's Meta, yeah.
What if we were moving to a one day a week work week or something, and the rest of the time we were sitting on our couch with those Oculus glasses and having the time of our life, just living the life we wanted to, and we were perfectly happy. And we were all basically getting a Social Security wage, and we were good. What is that movie? Wall-E.
Wall-E. That's exactly
Yeah.
what I was thinking. I was like, you're literally describing the plot of Wall-E.
Yeah, that's who knows what happens. I know it's very uncomfortable with how fast things are changing, and I think it's important that we all try to keep up.
But looking back though, with history, that's kind of how the pendulum's always swung.
Oh, yeah.
Is you can go back as far as like the steel revolution. That was just a big swing for everybody when locomotives started coming around, cars and whatnot. But what happened? We started to equalize right back. And so we're in our new pendulum. We're in the technology pendulum. We're in the AI pendulum. So at some point, just like the steel age and cars and motors, we're going to find an equal balance. That's going to happen because we, as humans, we don't like change, but we trust humans over anything else.
Yeah.
And so I think that's what's going to really drive home back to that pendulum equilibrium.
Yeah, that will never change. We always want better tomorrows. We always want more for our kids than what we had.
Well, and it's really capitalism that's going to be driving that more than human goodness. I think self-interest and good integrity is hopefully going to, in the long run, revert everything back to the mean, and so everything's going to be balanced.
This kind of reminds me, it's a little bit off, but Dad always tells me he remembers going to the movies and he paid a nickel to get in and then 2 pennies for a pickle and a dime for a Coke, and he could go to the movies on a Friday night for 15 cents. Can you imagine the stories we're going to tell our grandkids? Yeah, I used to only pay $20 to go into the movie. The Coke was $7. Can you imagine it? Only paying $7 for
You're
a
right.
Coke and $13 for a bag of popcorn.
Yeah,
And that's
your
on a
mom
cheap
didn't
day.
know what I was thinking; she only knew where I was.
Yeah.
Yeah.
And they're going to say, "What is a movie?"
Yeah.
Yep.
Yeah.
Things are changing, and they always have. And I'm pretty sure no matter what the technological change was, we were always uncomfortable with it.
For sure. But tying it back to the market, it's going to change and it's going to go, but it still swings each way. So what to do is not to freak out and pull out in this case. It's to kind of ride the storm for a little bit because the market does correct.
Do not get overly greedy. Keep your wits. Try to get your emotions out. Make right decisions and stay within what you should be doing. Keep your discipline, and we're going to be okay. And we just got to keep remembering that we're all humans and we all want better tomorrows. So sorry it's been so long. We'll get back into these weekly podcasts.
And
God
maybe
bless everybody.
Yes. Y'all have a great night.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.